What's the simplest way to interpret the direction that the market is headed? That's the question Miss Lil has for us, and we'll discuss that today.
Welcome to It's the Market, where every month we answer your questions and give you up-to-date information on the real estate market in Tampa Bay and West Central Florida. And now, here are your hosts, the power couple of real estate, Vince and Cindy Reina.
Hi guys, it's November, a little bit after Thanksgiving. Hope you guys had a great Thanksgiving.
Lots of yummy food.
And it's a November edition of It's the Market. Today we are going to cover October's data. Remember, every month we're a month behind because we're getting all of this from the Florida Association of Realtors. And so one thing I wanted to do, because I don't want to confuse anyone, is explain to you guys the difference between median days on the market and average days on the market, which is kind of a big quagmire for some folks because it's really kind of hard to figure it out. But the easiest way for me to explain this to you is if you were to see a group of kids between, say, 1 and 10 in a group together, okay, and then you had maybe their grandfather who's 65 years old and he's standing off to one side. If you were to average all of their ages together, you might get 13, 14, 15, even though the main body of the people there are aged 1 to 10. That would be the complete average. The median average discounts grandpa, who is 65 years old, and looks at all of the ages of the people that are standing there that are as close to the median value as it possibly can, and it comes up with a little bit more accurate data. And so the same thing happens with your home. If you're looking at averages in a neighborhood that sells at $200,000 can go from 155, 160, and if there's a mansion right around the corner that just happens to be in with whatever they're doing, with maybe a geographic region or what have you, it could be 500,000. That would skew towards the upside or even towards the downside, depending the data that you're looking at. So everything that we're doing is looking at median values. So that's going to be the value based on what's in the middle, not on the outsides, low or high. Okay? Cool.
Now, based on that, understanding that we're going to be taking a look more at the middle/median, for Lakeland and the Winter Haven area, keep in mind October, the number of new listings were 894, which is up from September. That's good news. The number of months supply for October of 2017 is just over 3 months, and that number is 3.1. And that number actually is down a little bit from September, which was 3.3. Now, the median time to contract, the contract means it goes on sale, then it's pending because somebody wants to purchase it. So that contract time for October is 42 days, whereas for September it was 35 days. And then finally, the median sales price for October is $180,000, whereas for September it was $187,000. So that's just for the Lakeland Winter Haven area. Vince is going to review the Tampa area.
All right, so for Tampa Bay, and this is all of Tampa Bay, we've had, let's see here, in October, 4,669 new listings, and that is up from 3,172 in September. The month supply has stayed pretty much the same, about 2.5 months, 2.6, and so that's pretty much a wash. Median time to contract has gone from 26 days in September to 32 days, so it's lengthening a little bit. And median sales price has gone from 225 down to 217,000 in October. So Cindy is going to take Orlando, Kissimmee, and that whole area there.
Orlando and Kissimmee, the new listings, the good news is that number is up for Orlando, Kissimmee as well. In October, it was 3,076 new listings, whereas September it was 2,196. The month supply in Orlando remains the same, remains unchanged at 3 months supply. The median time to contract in Orlando has actually increased a little bit as well. In October, it was 85 days versus 79 days in September. And then finally, the median sales price has come down a little bit in the Orlando-Kissimmee area as well. In October, it was $247,000, whereas in September it was $250,000. So that was Orlando-Kissimmee.
Right. Now, bear in mind, guys, these variances are pretty normal. You're going month to month. If you were to look at this data from, say, last year to this year, you're probably going to see a pretty big upward swing. You can almost think of it like a stock market chart, where if you're going on a very narrow focus of data, you're going to see a lot of this. But if you were to broaden out to a year's worth, it may look like, you know, a bunch of squiggly lines, but all the squiggly lines are going up. So right now, all of our squiggly lines are going up. It's just when you try to narrow your focus, it may look a little bit different because, you know, it's going to vary month to month, but overall, things are still continuing to rise. Now, to answer Ms. Lil's question,
yes.
In my opinion, and this is just my opinion, the simplest, not the best way, but the simplest way to determine which direction the market's headed is going to be the days on market, okay, which is what we're giving you, and the price. So the close price and the days on market. As the days on market get longer, generally speaking, the price will start to go down. As the days on market get shorter, the price goes up. Bear in mind, everything in real estate is about selling a commodity.
Yeah.
When you put your home on the market, it's now not your home, it's a house. And the difference between a home and a house is a home has memories.
Yeah.
It has love, it has affection, it has all the things you did to the house to turn it into a home, and all the memories you had of living there. A house, on the other hand, is four walls, it's carpet, it's flooring, it's, you know, it's stuff.
Yeah.
And people, they look at stuff differently with different emotions than they do with the memories that you have. So, when you're looking at the days on the market compared to the value, what you're actually looking at is a very small picture of the housing supply and demand. And so as one goes one way, the other goes the other. So days on the market longer means probably higher or lower prices. Days on the market shorter means higher prices because you have that supply and demand. So that answers Ms. Lil's question. Hope you guys enjoyed what we're doing for you. If you have any questions, you can always let us know. If you have a question that you want answered on our show, like right now, email me, vince@thereinateam.com. You'll see it come up on the bottom here. Remember to like us on Facebook. All the links are provided below. Subscribe to our YouTube channel. Sorry, that didn't come out right. And then register on our website, yourmoveflorida.com. And that way you can look at a lot of stuff that we've provided for you there, whether it's looking for homes, setting up market reports, getting a value on your home based on median values. Okay, so that's the show. Got anything else you want to say? You want to add into this?
Yeah, when you email him your question, tell me what your favorite Thanksgiving dish is. Mine is sweet potato casserole. Thanks, Mom. Love ya.
Oh, and by the way, if you want a recipe for how to get rid of all of that mac and cheese that's sitting in your fridge right now,
yeah,
we have the perfect recipe for that, and we would love to share it with you. Email Cindy@thereinateam.com. That's CYNDI @thereinateam.com, and she will send you that recipe.
We got to stop talking now. Bye.
All right. Bye, guys.
Miss Lil wants to know, what is the best way to interpret the data? And I don't know what else to say at this point because it left. Goodbye. Okay. What is the best